What if I told you that right now, we're living in one of the most extraordinary moments for building wealth? And no, it's not just a fantasy or a get-rich-quick scheme. It's a moment created by forces shaping our economy. And if you understand them, you might just change your financial future forever. Think about this. Interest rates are sitting at 5.5%, while inflation is hovering at 2.5%. That's a massive gap of 300 basis points. What does that mean for you and me? It means things are tight. Too tight. For a lot of people, getting a mortgage seems impossible. Buying a car feels out of reach, and even using a credit card can come with sky-high rates. The economy feels like it's being squeezed from every angle. But here's the twist. Within this economic crunch, some experts see an opportunity, and not just any opportunity, one of the best chances to build wealth we've seen in years. The key to navigating this environment is understanding something many overlook: liquidity. And we're going to dive into why that's the secret sauce behind what could be the next big financial wave. So what is liquidity, and why is it so important? After the 2008 financial crisis, central banks around the world did something pretty drastic. They started injecting huge amounts of money into the economy to keep things from collapsing. This influx of liquidity became the fuel that powered markets for years. In simple terms, liquidity refers to the amount of money available to circulate in the economy, and it's the driving force behind what we're seeing today. This might sound abstract, but it's very real. Every time central banks pump more money into the system, something important happens. Currencies lose value. But while that sounds like a bad thing, it also causes the price of assets like real estate, stocks, and even Bitcoin to shoot up. It's like magic, but not the kind you necessarily want to cheer for. Imagine this. You're saving your money in a bank account, trying to be cautious, but every day that you hold on to your cash, its value is slowly melting away. That's because as more money floods the market, the purchasing power of your savings drops. It's like trying to fill a bucket with a hole in it. The longer you wait, the less you'll have to buy the things you want. This effect, known as debasement, is subtle but relentless. And the scariest part? Most people don't even see it happening. It's like a trick being played on you day by day, eroding your wealth without you even realizing it. And here's where the opportunity lies. Instead of holding on to cash, smart investors are turning to assets that rise faster than inflation. Now, let's take a look at a real-world example. When Raoul Pal, a brilliant macro investor, bought his first home in London, it cost him just 3 times his salary. Today, for a young professional in a similar position, that same home could easily cost 10 or 12 times their yearly earnings. That's not just inflation. That's asset price inflation in action. The value of homes, stocks, and other assets keeps going up, while wages simply can't keep pace. This is why it feels harder than ever for people, especially young professionals, to get ahead. The reality is, in today's economy, if you're not invested in rising assets, you're losing ground. While wages stagnate, the price of things like real estate, stocks, and even cryptocurrencies continue to climb. But here's the good news. You don't have to be left behind. By understanding how liquidity works and positioning yourself accordingly, you can take advantage of these economic forces rather than falling victim to them. One of the most important insights PAL offers is this. Central banks, particularly the Federal Reserve, are essentially guaranteeing that markets won't collapse completely. Why? Because they'll step in with more liquidity to keep the system afloat. This is known as the Fed put, and it's a big deal for investors. It means that while there's risk in any market, the biggest risks are being actively managed by the very institutions that set the financial rules. So, what does this mean for you? Well, PAL argues that the current economic environment is one of the best setups for wealth creation we've ever seen. With liquidity flooding the system, it's an ideal time to embrace risk, not shy away from it. Whether it's tech stocks or cryptocurrencies, now is the time to get involved. Let's talk about the numbers. Over the past decade, tech stocks have returned an average of 17% per year. And Bitcoin? It's delivered an astonishing 140% annual return since 2011. There's no other asset class that comes close to these kinds of returns, and Powell believes we're just getting started, especially in the cryptocurrency space. According to his analysis, the total crypto market, currently valued at around $2 trillion, could balloon to 10 trillion or even 15 trillion by the end of this cycle. But this isn't just about Bitcoin. We're entering what Powell calls the macro summer, a period where multiple asset classes will experience significant gains, from commodities like gold to small-cap stocks. And of course, tech and crypto, there are plenty of ways to position yourself to benefit from this liquidity-driven boom. The takeaway here is simple. Sitting on the sidelines, waiting for a perfect moment, could mean missing out on one of the greatest wealth-building opportunities of our lifetime. Powell stresses that now is the time to act. The risk isn't in participating, it's in doing nothing. As we look ahead, Powell warns that this window of opportunity won't last forever. By the 2030s, he predicts that exponential technologies like AI and automation will fundamentally reshape the economy, making traditional investing strategies obsolete. But until then, we're in one of the most fertile environments for wealth creation that we may ever see. To sum it all up, if you want to protect your purchasing power and potentially grow your wealth, the key is to be invested in high-growth assets. Whether it's Bitcoin, tech stocks, or other assets that benefit from the current wave of liquidity, the message is clear. Get in the game, or risk being left behind. Thank you for sticking with us through this breakdown of some of the most important economic trends shaping our world. If you found this video helpful, don't forget to give it a thumbs up and subscribe to Economic Hero for more content designed to help you navigate today's complex financial landscape. See you in the next video.